the 12th of this month, and it's going to add a lot of selling pressure. It could bring up to $2.4 billion of selling pressure to Ether, says some observers. Now, it's important to note that not all of the ETH is completely unlocked right away. And so the total ETH that is, I believe, locked up is around 18 million. Which is way more than 2.4 billion, but this is important because this is the immediately available extractable Ethereum from the current nodes that will unlock. So Ethereum's backward incompatible Shapella hard fork or Shanghai upgrade, slated to happen in 8 days, will let users withdraw their staked Ether. The lingering fear in the market is that the impending unlocking of ETH deposited in the network to boost security in return for rewards will see some holders rush to exchanges to liquidate their tokens. According to some observers, the resulting increase in selling pressure could be worth a couple of billion dollars. 1.1 million ETH related to partial reward withdrawals could face the market, while Celsius Network is likely to sell its 158K staked balance as part of its bankruptcy process. This isn't just likely, this is, I believe, as far as Celsius is concerned, required by them to pay off its debtors, right? So 158K, that's just gonna happen no matter what. These two numbers represent nearly 1.3 million ETH, or approximately 2.4 billion US dollars worth of potential sell side pressure to face the market. Analysts at the K33 Research said in a note to clients on Tuesday. More than 18 million Ether has been staked in the network since the beacon chain went live in December of 2020. So to put that in perspective, right, just 10x what is immediately extractable and then push that out over time, right? And what you see is essentially a lot more selling pressure, 10 times the initial selling pressure, right? So 20 billion worth of selling pressure to Ethereum from basically this upgrade going into place. Of course, they're going to try to mitigate this by putting limits on there, and a lot of custodial wallets like Coinbase and stuff have already put into place. How would I explain this? A pretty stringent request form that you have to go through if you want to extract your Ethereum, if you're going through like a custodian, and that's going to put even more blocks in place for a lot of the people that staked through basically centralized entities. While the entire balance cannot be unstaked immediately after the upgrade, about 1.1 million coins earned as rewards for staking can be instantly withdrawn. Ether stakers are paid rewards in ETH. Additionally, selling pressure could come from the bankrupt crypto lender Celsius liquidating its staking balance of 158,176 ETH to recover at least a portion of creditors' funds. Per K33, San Francisco-based cryptocurrency exchange Kraken which recently came under the regulatory hammer for failing to register the offer and sale of its crypto asset staking as a service program in the US, is likely to unstake all ETH staked by stateside investors. At press time, the number of ETH staked through Kraken was 1.2 million. So really, if we look at that right off of the bat, that sounds to me like we're going from 1.1 million to 1.3 million to really like 2.5 million, which would take us up to, you know, around 5 billion of sell pressure on Ethereum. And that could definitely be significant. Kraken will unstake. I mean, this is more significant than any miners, by the way. And that is something to note here, is like when we talk about sell pressure from miners can be taken out daily. Okay. And so the sell pressure happens over time and in relation to the cost of energy, right? And there is more sell pressure when miners have loans and so on. And like we saw with Bitcoin and stuff, which can make it a lot worse if you have basically poor books for some of these mining companies. But when we talk about this kind of sell pressure, we're talking about immediate sell pressure of 5 billion, right? We're not talking about over time or daily sell pressure from miners. It's a lot smoother of a transition when you see sell pressure from miners. It's not when you see sell pressure from basically node runners or stakers, right? Because the stakers at the end of the day have been staking for a very specific reason, which is to basically make a profit, right? And while that is true for miners, the special part about miners in this particular scenario is miners have costs. They have the power cost. So they have to answer to someone as far as for running their machines. Individuals that are just staking don't have to really answer to anyone as far as that goes, right? Maybe their VPS provider, but for the most part, you can just turn down your VPS provider pretty quickly. And it's not that big of a deal. You don't have an incurring cost or this threat of price or bills every 30 days, right? As you do with something like mining. Kraken will unstake all ETH staked by US investors as a result of its Wells notice. This could entice some of Kraken's ETH stakers to sell, analysts noted.
Established in 2017, Octominer is an international mining hardware company. They manufacture and engineer the best mining equipment in the industry and supply rigs to some of the largest mining farms around the world. Their GPU mining rigs also integrate with the top crypto operating systems like HiveOS, MinerStat, and Simple Mining. All parts come with an international 1-year warranty. Exciting news! They will be adding ASIC miners for sale to their website soon and launching a new product built specifically for ASIC home miners. Please visit octominer.com or email support@octominer.com for questions.
The expected supply boost of more than $2 billion amounts to just 20% of Ether's average daily trading volume, according to data sourced from CoinGecko. However, I'm going to take us all the way back there and say, like, really, to me, it sounds like we're doubling that, right? It sounds more like 40% initially of the daily trading volume. Partial withdrawals are likely to take between 5 and 6 days to process, and full withdrawals 3 weeks and 4 months, according to analysts by 21 shares. In other words, the selling pressure will likely be distributed over several days. Yeah, but that's a lot different than being distributed over 365 days, or even if we go quarterly, at least like, I don't know, 4 months daily with like mining. Like, I don't know, it's a lot of sell pressure within a short amount of time. Quote, thanks to the modest daily limit on the original 16.27 million Ether, this potential selling pressure is evenly distributed over a long time. This should allow buyers to match the selling pressure without much impact on the price, end quote, Saxo Bank's cryptocurrency analyst Max Eberhardt said in Shanghai Upgrade Preview. He added that a large share of Ether shakers are long-term investors and are unlikely to liquidate their holdings after the upgrade. I mean, if you are running a node, you probably are waiting. What will be really interesting is what happens during the next bull run, right? Because you probably are, if you're knowledgeable in the space at all, you know that Bitcoin is going to go up in price, which is going to influence the rest of the market. And if it's going to influence the rest of the market, you're probably waiting till then, right? So we're probably looking at like October 2025 to January, or sorry, October 2024 to January 2025, where we could see a mass exodus of the actual node runners or stakers on Ethereum, right? And that's kind of really where I would see a majority of the drops going, just from, you know, what I would do if I was them, right? The chart by K33 shows 46.3% of Ether staked is in profit, as Ether's going market rate is higher than the rate prevalent when these coins were locked in the network. Meanwhile, 28.04% of Ether staked is sitting on a profit of more than 20%. That number drops to 24.2% if we exclude coins staked through liquid staking services offered by Lido and Coinbase. Per K33, 66% of this 24.2%, amounting to 16% of all ETH staked, was deposited before February of 2021 by long-term investors. The lion's share of this group is unlikely to unstake any substantial amount, as ETH trades 63% below its all-time high. Analysts at K33 said, tokens associated with liquid staking derivatives are unlikely to be unlocked to be sold. Now, the other question is, what happens if the SEC determines ETH is a security and says, you know, you have to get out now? Does Coinbase follow suit with Kraken in this particular case? And then you have all of that selling pressure that comes as well, almost forced by regulation. These are things that are going to come up, I think, quite a bit. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.